Hello everyone, welcome back to the channel. Today's topic is absolutely game-changing. I managed to turn a single option contract into a staggering $27,600. And the best part, I'm still in this position making money every single week. What's the secret sauce? It's the wheel strategy, a highly secure investment approach that comes with a robust safety net. I've been using this strategy to consistently grow my capital, and you can too. And if you're curious about the trades I make, I do share my trade alerts on Patreon. It's a space where I offer insights and details about my trading activities. No pressure, but it's there if you'd like to know more. All right, stay tuned as we explore this investment strategy in a chapter-by-chapter format. I've broken down today's video into chapters because I want this to be a learning-based experience for you. Each chapter offers crucial insights, so you'll definitely want to catch them all. But before we get into the good stuff, could you do us a quick favor? Hit that like button. Your likes help us reach more people, making a big difference with just a click. Thanks for being part of our growth. Are you ready to turbocharge your investing journey? Weeble's got your back. Click the link in the description, deposit $100, and boom, up to 12 free stocks are yours. But why stop there? With Moomoo, grab 16 more free stocks. Keep them, sell them, profit from them. It's free money waiting for you. Don't blink, don't wait. Grab your free stocks today. Let's make investing exciting. Welcome back to Chapter 2, where we're diving deep into the secret sauce of the wheel strategy, effective management. You might think that making money is the end goal, but let me tell you, it's just the beginning. The real challenge lies in preserving that money, and that's where effective management comes into play. First, let's talk about the art of opening and closing positions. It's not as simple as clicking a button. You need to consider factors like market conditions, stock volatility, beta, and your financial goals. When you open a position, you're committing your money, so you need to be sure it's the right move. Similarly, closing a position requires timing. Do it too early and you might miss out on potential gains. Do it too late and you risk losing your investment. So understanding the right time to enter and exit is crucial. Another key point is that the wheel strategy is not a one-size-fits-all approach. Whether you have a small, medium, or large account, this strategy can be tailored to fit your needs. For small accounts, you might focus on lower-priced stocks or ETFs. Medium accounts can diversify a bit more, while large accounts can take on more risk for higher returns with higher dollar stocks. The strategy is flexible, adapting to your financial situation seamlessly. In Chapter 3, we're diving even deeper into the core principles of the wheel strategy. Trust me, you won't want to miss this. First, let's talk about the entry point, which involves selling a put option. Let's say you're interested in a stock that's currently priced at $60 per share. You can choose a delta between 10 and 30, which is my personal sweet spot. By selling a $50 put option, you set yourself up for a favorable outcome. If the option is exercised, you get to buy the stock at $50 instead of $60. That's a $10 savings per share, and those savings can definitely add up quickly if you're buying multiple shares. Now, let's move on to choosing the right stock and delta. The stock you select should align with your investment goals and risk tolerance. As for delta, it's a measure of how much the option price is expected to change when the stock price changes. I usually like deltas between 10 and 30. However, it's important to note that the higher the delta, like 30, increases the likelihood of being put the stock. Essentially, the higher the delta you sell, the more willing you should be to own the stock. And there you have it. The essence of the wheel strategy is about making smart choices at the entry point and being informed about the risks and rewards. By understanding these elements, you're well on your way to mastering the wheel strategy. For Chapter 4, we're diving into the art of picking the right stocks, or as I like to call it, finding your golden goose. Now, when it comes to stock selection, quality is the name of the game. You want to invest in companies that not only have a strong track record, but also have the potential for future growth. First, let's talk about the titans of the stock market. These are companies like Apple, Amazon, Google, Microsoft, and maybe even Tesla. What do they all have in common? They've consistently outperformed the market. These companies are leaders in their respective industries, and they offer products or services that are integral to our daily lives. Investing in such companies can provide a level of security and potential for steady growth. Before we move on, let's talk about your personal criteria for stock selection. You can choose any stock that you are bullish on, but you'll want to look for specific criteria to make an informed decision. These criteria include high stock volume. This measures the liquidity and easier entry and exit points. High option volume. This is crucial for the wheel strategy as you'll be dealing with options. Preferably weekly options. Now, weekly options offer more flexibility, although this is not a strict requirement, but it's one that I personally love. Tight bid-ask spreads. This ensures that you can get in and out of positions at favorable prices, and emotional decisions, these are your worst enemy. Now, on to a critical point, emotional decisions. It's easy to get swept up in the hype, especially when you see a stock skyrocketing. But remember, what goes up must come down. Emotional decisions can lead to impulsive actions, like buying high and selling low, which is a surefire way to incur losses. That's why it's crucial to have a well thought out game plan and stick to it. Your strategy should be based on solid research and analysis, not feelings or trends. And there you have it. By focusing on quality and avoiding emotional pitfalls, you can select stocks that are more likely to bring you consistent returns. So are you ready to find your golden goose? Chapter 5, Timing is Money. One of the most crucial aspects of stock market investing is timing. As the saying goes, timing is everything, and in the stock market, this couldn't be more accurate. So how do you nail the timing? Let's dive in. First up, let's talk about the two pillars of stock analysis, fundamental and technical. Fundamental analysis involves evaluating a company's financials, management, and market position. This gives you an idea of the company's overall health and growth potential. On the other hand, technical analysis focuses on price patterns and market trends. By using both, you can get a comprehensive view of the stock and make more informed decisions. For example, fundamental analysis might tell you that a company is undervalued, while technical analysis could show you the best entry point based on price trends. Next, let's discuss delta, a key concept in options trading. Delta measures how much an option's price is expected to change when the stock price changes. For me, the sweet spot is between a delta of 10 and 30. For example, with Tesla, I often sell 10 delta cash secured puts for weekly income because Tesla is volatile and the premiums are still very good. However, for other stocks with lower volatility and premiums, I'll be in the 15 to 30 range. This range offers a good balance between risk and reward, allowing you to optimize your returns based on the stock's characteristics. By combining fundamental and technical analysis with the right delta, you can achieve near perfect timing in your stock market transactions. This trifecta of elements sets you up for success and maximizes your potential returns. If you're finding this content valuable, make sure to hit that like button and subscribe for more insights. Up next, we're exploring the versatility of the wheel strategy, so don't go anywhere. All right, Chapter 6, where we explore the incredible versatility of the wheel strategy. This strategy is like a Swiss Army knife in your investment toolbox, adaptable to various market conditions. So let's dive into how this strategy can work for you in multiple scenarios. First, let's talk about the different ETFs you can use with the wheel strategy. Popular choices include SPX, Triple Q, and SPY. Each of these ETFs has its own set of characteristics, but what they all have in common is that they offer a broad exposure to the market. This means you're not putting all your eggs in one basket. Whether the market is on an upward trend, staying flat, or even experiencing a slight decline, these ETFs provide you with opportunities to make money. Now, let's address a critical question. What happens if the put option expires out of the money, known as OTM, or in the money, ITM? If it expires OTM, you keep the premium and can sell another put option. If it expires ITM, you'll be assigned the stock, which you can then either hold or sell covered calls against. Each scenario has its own set of actions and outcomes, and understanding these can help you navigate the strategy more effectively. By mastering the versatility of the wheel strategy and understanding the different scenarios, you set yourself up for consistent returns regardless of market conditions. This strategy is not just about making money, it's about making money smartly. For Chapter 7, we're going to dive deep into the critical topic of risk management. The wheel strategy is renowned for its built-in safety net, which allows you to minimize losses even when the stock price takes a dip. But how does this safety net function, and what should you be aware of if you're considering using margin? Let's unpack this. First, let's delve into the built-in safety net that the wheel strategy offers. This strategy allows you to mitigate losses in a declining market by selling covered calls if your put option expires in the money and you're assigned the stock. This not only generates additional income, but it also lowers your cost basis, effectively reducing your risk. It's like having a financial cushion that softens the impact of market volatility. This is especially useful for beginners who might not be accustomed to the ups and downs of the stock market. Now, let's talk about using margin, which can be a double-edged sword. While margin can amplify your gains, it also increases your level of risk. Personally, I do not like to use margin, but I've included it in today's video because it can be a valuable tool for building wealth. However, you must proceed with caution. If you get sloppy, margin can destroy your account. If you're contemplating using margin, it's crucial to be well educated about its implications. You should have a contingency plan for potential margin calls and be prepared to adjust your strategy on the fly. For Chapter 8, we're diving into the nitty-gritty of how I turned a single contract of NVIDIA into a whopping $27,600 in profits, and it's still growing. This is the chapter you've all been waiting for, so let's get started. First off, let's talk about the stock in question, NVIDIA, which is ticker NVDA. I started this wheel trade on May 26 when I bought 35 shares so I would have a total of 100 shares for the wheel strategy. My cost basis is now down to $173.95. Since then, I've been generating a consistent weekly income from this position, averaging around $189 per week. The wheel position in selling covered calls started on May 26, and if I were to close it on October 6 with the open $450 covered call, the total profits would be $27,605. That's a return on investment of 126.6%, and if we annualize that for 133 days that I've been in the trade, it's an astounding 347.4%. Now, let's talk about the weekly covered call rolls. Just this Monday, I rolled my September 29th $460 covered call to the October 6th $450 for a $297 credit, which put another $297 in my pocket. I locked in weekly profits of 91% on the covered call roll. And the covered call I sold was a 20 delta, meaning there's an 80% chance that I keep the premiums and will be able to roll the contract next week as well. Each week I sell covered calls on this NVIDIA position and generally roll them when the profits are above 90%. This strategy allows me to ride the stock up, which has been incredibly profitable since May. The beauty of this approach is that I now have over $27,600 in profits from this one position, and I can take full profits anytime I choose. And there you have it, folks. That's how I turned a single contract of NVIDIA into $27,600 using the wheel strategy. If you found this chapter insightful, make sure to hit the like button and subscribe for more. Up next, we're going to wrap up, plus I have a special bonus just for you, so stay tuned. And now for the final chapter, where we're wrapping up everything we've learned about the wheel strategy. This strategy is not just a tool, it's a comprehensive approach to investing that can bring you both steady income and capital growth. So let's summarize the key takeaways. First, one of the most compelling aspects of the wheel strategy is its versatility. Whether you have a small, medium, or large account, this strategy can adapt to your financial situation. It's not a one-size-fits-all approach, but rather a flexible method that can be tailored to meet your specific needs. This adaptability makes it suitable for both beginners and seasoned investors alike. Another critical point is the strategy's high success rate when executed correctly. Proper management, timing, and risk assessment are crucial for maximizing your returns. If you're new to this strategy or have questions, I offer free training and have a Discord channel where you can see live trading examples and interact with a community of like-minded investors. The links are all provided below. By understanding and applying the wheel strategy effectively, you can enjoy consistent returns and grow your capital in a calculated, risk-mitigated manner. It's a dynamic and versatile approach that has something to offer everyone. I really appreciate your dedication in watching the entire video, and as a token of appreciation, I'm offering you access to my complimentary option analyzer on beastmodeanalysis.com. This tool allows you to execute your wheel strategies and track your earnings while constantly updating your cost basis. My option analyzer provides comprehensive step-by-step guidance through the wheel process. Thank you so much for tuning in. If you're interested in real-time trade alerts, consider joining my Patreon community. Want to explore my TradingView indicators? You can try them out for free. The link is right in the description below. Also, don't miss out on claiming your free stocks from Webull and Moomoo. To stay in the loop with all of my upcoming content, please hit that like and subscribe to the channel. Your support is the fuel that keeps this channel running, and